Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over a little bit of data. And so this is Saturday, March 15th. I wanted to do a follow-up video on AMC, just point out a couple things that I missed in the last video I did a couple days ago. And, I think that there's a pretty nice bottoming signal with GameStop. I was going to say GameC, GameStop. And, so I'm pretty excited to go over that, but it may not be, perfect, but I think it does look really good. And then also some similar stuff with Unity. Generally, I do think that GameStop does look the best out of the three of these, but I think that over the next couple weeks, we could really start to see these take off. But I do think that GameStop will be in the lead. So I'm just going to first start with AMC just to kind of follow up on the video from 2 days ago. I believe I put that out on Thursday. There was one thing that I missed in the video. I just got to take a step back to show it. And so without any drawings up here, one thing that does stand out is that we have seen lower lows here as well as, from here. This is a lower low hitting a low on Thursday the 13th of $2.82.2. And so with these lower lows, if we look over at the RSI, we see that we're actually putting in higher lows. And so that is bullish divergence. That is suggesting that we could be seeing a bottom very soon. However, with the close on Friday for the week that ended on March 14th, we closed at $2.90. So I was hoping for a close above $2.91 because, I do have this alert here at $2.91. And if I do throw out my drawings, don't want it to be too cluttered. But I had talked about this blue line here being a gap that was initially formed, I believe, in May when we had the big move last year. And so that was filled. And so what I was looking for was a weekly close above that level, with a wick down for the week and a close above, suggesting that there could be a bottom. But we did close just below that level. And so, I don't think the bottom is necessarily in with AMC. And if I do, flip this over to the weekly chart, we can see that, this is not such a clear bottoming signal. Like I was saying, hoping for a wick down, close above. And what we see here is a spinning top. And so that could suggest a reversal, a spinning top with the big wick to the upside and downside, or like equal sized wicks with, the body of the candle here. That does suggest indecision that the market or the stock could be turning around in the next week or coming weeks. But this also could just be a continuation of this downtrend. So, I think it's something to not be getting too excited about just yet. But I do think that, as trading below this level 291, it's been like 8 months since we've been this low. So I definitely think this is the discount zone, but I don't necessarily think the bottom is in just yet. And part of the reason for that is with the close at $2.90. If I do flip over to unusual whales here to look at the AMC max pains, and we do see that for the 14th, so for yesterday, for Pi Day, we did, close below max pain of $3. And then this coming Friday, so for the 21st, max pain is $3.50. So, that's kind of, a notable move for AMC to be making in just the span of a week, to be getting above max pain. But then it looks like the following 6 weeks, max pain is $3 a share. And considering that AMC hasn't been this low in, 8 months, I do think that it is quite feasible for AMC to be closing above $3. But that would be, in the coming weeks. So not this coming Friday of the 21st, but the following weeks, I think that we could maybe start to see a gamma squeeze or a gamma ramp happening with AMC. But the one, like I said, that I'm really excited about is GameStop. And so here, looking at the daily, what we potentially have over here is, I believe this is a morning star pattern or a potential morning star, where you got the big red candle here, followed by kind of a pivot to a gap up and close higher here. Would have been nice to see a close above the high from the 12th, which was at a price of 23.24. So closed at 19 cents below that, but with the close above 23 being up over 5% on Friday, I do think this is looking pretty good. And we did get a wick down to a low of 21.56 on Thursday the 13th. And some of you may remember this from the videos that I have done on GameStop, is this level here at 21.69. Just having fun with the number 69, but also that being a 786 from a pretty important retracement. And so, if I do take a pretty big step back, we could see the moves that we saw over here in May. So this retracement going from the low of 995, which I believe was hit on April 16th of 2024, then going up to that high of May 14th. We could see that 786 is at that price of 21.69. So we did pierce that level on Thursday. I do think that could be, with this Morningstar pattern, a potential bottoming signal. You also might notice that purple uptrend that I have drawn there, and that is actually based on, I believe, the lows following the big move up. So it looks like a pivot point from the low of May 24th of last year. And the other pivot point has to be August 5th, when markets gapped down last year. So I think that's a pretty important date in market history. I believe that was a carry trade or something like that, something globally happening. Markets gapped down on August 5th, and that is the other pivot point there. So following that uptrend, we have tested it, over here. This was looks like September 18th through the 20th. Also got a wick down there on the 11th of September with this gap down over here. Started to move up there, and let's see other times that we have retested that purple line. Not really, just until the past week. And something that I talked about in one of my last videos was coming down to this red dashed line here at $23.41. That is Roaring Kitty's average, or at least from his last YOLO update on Reddit. I believe that was probably like 6 months ago, something like that, that he did post his last update. And so we are trading below his average. And, if his, handle there is DFV, I think that we are back in DFV territory. So even if this does go a little bit lower, like I do have this level marked down here at $20.34, that is the 100% extension from this Fibonacci retracement there. So, even if it does go lower, I think that's just deep value zone. And but I don't necessarily think that we're going to be going to $20.34 or $20, just thinking about round whole numbers there. With earnings coming up, I believe, is it on the 25th? I thought there was some announcement about, sorry, I don't know it right off the top of my head, but I believe earnings will be reported pretty soon, perhaps on the 25th. Don't usually have a call for GameStop on those. But maybe that's going to be a bottoming signal, or, a gap up or a rally to be following that. And then I do have this shaded box here. Can't remember when I drew that. I don't think it was in a video. Might have been during a stream. Just to let you know, I do ticker request live Sundays, 9 p.m. Eastern. If you want to join, happy to follow up on GameStop, take some questions, some requests then if you like. But we did come back to that box. So I do think that this is, the discount zone. I do have this yellow uptrend. I will delete that one, but I did just want to point out what that is from. That is from the pivot low from the 20th of September, what I was talking about here. And, then it looks like the low from the 23rd of October. We were trading above it over here, but it looks like we just formed, a bear flag effectively, bearish consolidation there before breaking lower. So I don't think that line is really that significant. So I am going to delete it. But just like I showed with AMC, I wanted to throw up the weekly chart. And with GameStop, closing above 23. And if I just remove my drawings there, we do have this really nice hammer candle for the week. We opened the week, it looks like, at a price of $23.44, closed the week at $23.05, but with that low of $21.56, this does look like it's a potential reversal signal, although there are, a couple things that are a little bit concerning about it. One is that yellow line there. That is going to be, looking on the weekly time frame, the 50-week moving average. So closing below that and actually opening the week below that, not such a good look there. So that is something that is a little bit concerning. But with this hammer candle, this invert or reversion signal that we might be seeing, the thing that I would like to see with it is volume starting to pick up. And so if we do look at this, we see that over here, volume for this week that ended on February 14th, we had 41 million shares traded that week. And then since then, as prices come down, volume has just been, really not too, exceptional, which is good as this is coming down, because that's suggesting that there aren't really that many sellers, but it's also suggesting that there aren't really that many buyers. And so we need to kind of see that turn around. And so over the course of these weeks, we saw about 23.5 million, 24.5 million, 19.5 million, and then this past week about 22 million. So there is a little bit of an increase in volume there. And so with this being a hammer candle here, suggesting potential reversal and this slight uptick in the volume, that could be suggesting that the bottom is in here at 21.56. But we do need to see this volume start to increase a little bit more notably, like getting back to, the $40 million shares traded over the span of the week. And so I think that we might be seeing that starting next week or into the following week. That we really start to see this turnaround. And before I switch over to Unity, I did also want to just see where this is at on the daily regarding those moving averages. So it does look like we got kind of a bearish crossover here with the 21-day, that salmon color, dipping below the blue line, which is the 200-day moving average. So that does suggest, that this is kind of a bearish indicator, although this is a lagging indicator when we see these crosses. And so with the shorter time frame indicator moving below the longer term moving average. But if we start to see that turn around, that could be suggesting that we could be going higher. And with that 50-day moving average up around $26.77 or $27, that does seem like a level we could be heading towards. And over here, we did get rejected from that 50-day moving average on February 14th on Valentine's Day. Got a little bit of heartbreak there. And so maybe that could be where we're heading in the coming weeks. And so from current price getting up to that level, that's about a 15% move to the upside. But maybe we could be heading towards this orange uptrend, which, has been, over here support prior to this big move that we saw in May of last year. But then we flipped below that. It became notable resistance. Maybe we'd be heading back up to that level, and that would be a pretty sizable move, getting up to that orange uptrend, about a 70% move to the upside, and that might even be corresponding with getting up to, that gap that we have up there. That's about 110% move to the upside, with the gap at around 48.75 there. So, maybe sometime in 2025, I'm not going to put a specific date on it, but we could be seeing some more sizable moves to the upside like we saw last May, but who knows, with earnings coming up. And, like I said, I think this one looks the best out of all of these with this hammer candle, although, it's just the little bit of concern that we are below that 50-week moving average. But like I was talking about on the daily, we've got the salmon colored line here. That's the 21-week moving average. That's getting pretty close to that 200-week moving average. And so if we see a cross of that, the pink one moving above the blue one, that could be, a bullish signal that we could be seeing some moves to the upside. And before I switch to Unity, I did want to pull up the max pains for GameStop. So for the 14th 4-Pi day, max pain of $23 a share. We did close above that, so I think that's a really good look. But then next week, it is $23.50. So maybe we see a little bit of suppression. Maybe we need a week or two more before this really starts to break out or really starts to move higher, starting to see some volume really start to pick up before we start to see moves to the upside. And then following the 21st after $23.50, 25 for a couple weeks, 24, and then April 17th, 23. So that seems like maybe, a month from now, we could really start to see this ramping up. And then following that, towards the end of April, 21 and beginning of May. And for the monthly in June, $22 a share. And so I think that in the coming months, if not weeks, we could really start to see GameStop taking off. But anyways, just going to remove the drawings to switch over to Unity software. And so this did close on Friday for the week at $20.77, being up about 1.42% on the day. Does look like we have been caught by the 200-day moving average, that blue line there, which is currently at $20.22. So did close above that and did wick below that on the 13th. So I think that's a really good look for Unity. And if we do take a step back before I throw any drawings up here, what we can see is, from August of last year, we really started to put in a bottom here at around 1390, being below not only the 200-day moving average, but also the 50 in yellow and 21 in pink there. And then from that, we started to move higher, getting above the 21 and 50-day moving averages, but kind of testing them before going higher again, kind of getting rejected by that 200-day, breaking below all of them over here in November, dipping to a low of, 1729. That was a really nice dip buying opportunity, and we can see that we have been putting in higher lows here, stepping up, so looking really good. But then in, February on the 12th, we got this fake out break below the 200-day before going up. And, with all those drawings up there, I just want to get this measurement. That's about a 60% move to the upside before pulling back to test the 200-day, but now it looking like it is holding that as support. So I think that's just, a great look here with Unity, putting in higher lows and stair-stepping our way above those moving averages. Although, we did see, the shorter terms crossing above here, so that is a good look. But then that was, of course, a lagging indicator with the bullish moves here. We did see a pullback. And then we did see over here, again, lagging indicator, the 21-day crossing above the 50-day. But we are, prices breaking below those levels. Didn't hold those, but are holding the 200-day. So what I would really like to see is a move to above those levels, and then for these to stay aligned with the shorter term timeframes progressively being above each other, with the 21-day above the 50-day, above the 200-day, and the stock price being above all of them. And so with that being said, I am going to throw up my drawings here. Got a lot on here because I was really tracking a lot of stuff over here. I do need to clean up the chart. So let me know in the comments if you do want me to kind of dissect the chart a little bit more and clean up these drawings. But the really big takeaway that I see from this is this white uptrend, which is based on the low from August 7th of last year at 1390, as well as it looks like it was the pivot low from, I'm imagining, I was going to say August 5th But let's see, that was effectively over here, August 7th. I'm going time warp in my brain. But yeah, this would have been, let's see, the low from November 15th, which was at 1729. So those are the two pivot points to show these progressive higher lows. We did get a fake out break below it over here on February 12th, where we formed this gap here at, it looks like 1944. And we are, just hanging out above there. But, excuse all of the drawings, all of the clutter here. But it does look like we got kind of a fake out break below, in my view, of that white uptrend that has served as, a level of, or a line of higher lows. We're still putting in higher lows. So even if we're below it, we are still holding some notable levels. And I should note too, this yellow line here, it looks like it's a 786 that is at 1973. And so that is going to be from this big move that we saw over here from 1729 up to the high that we hit on December 6th, which looks like it was at a price of 28.67. The 786 from that is at 1963. So we did get a break of it over here in February, but now we're kind of teasing it over here. So maybe we are starting to see a bottom. But if I do clean up the drawings and I do switch over to the weekly, this doesn't necessarily look like a clear bottoming signal, but we did get a close. Let's see, just above the 50-week moving average, that yellow line there, that is at 20.75. So we closed 2 cents above it. So I think that's a pretty good look, but we are in this downtrend. It does look like from, a few weeks ago, about a month ago, the week closing on February 21st. On that week, we put in almost 32% upside move. We have retraced all of that. But what this does potentially look like on the weekly time frame, so this is going to need some time to play out, but this could potentially be a rising three methods where you have a big green candle followed by some inside bars that trade lower. This one did break below the low that we saw for that week ending on February 21st. The low for that week was $21. We did wick below that as well as close below that, so that's not necessarily the best look. But if we see a green reversal candle over the course of next week, if we start to close in the upper 20s, that could be a sign of a continuation. Effectively, what we saw over here, over the past, many months, going back to that low that we hit at 1390 in August of last year, where we see big green candle followed by kind of a retracement, another big green candle followed by a retracement, and then here we're seeing a big green candle followed by 3 candles down. If we start to see big moves to the upside, I think it's just going to be a continuation of this very healthy steps to the upside. And I think that Unity is going to be a lot higher later on. So I think this is just looking really good. But if we do consider the weekly close at 20.77, and do pull up, let's see, Unity over here in Unusual Whales, we can see that the max pain for the 14th was 22.50. And, sadly, we closed below that, quite notably below that. The following week is going to be 23, then 25 for March 28th. But once we get into April, we've got a couple weeks where the max pain is $20. So if we see a close, in April for the week, for the first and second week in April, well above 20, which I think seems pretty feasible, we could maybe start to see a gamma squeeze start to play out. But of course, these max pains do change every day as new options are open and closed. So we'll have to keep an eye on that. But yeah, generally, long term, I just think that Unity software is a deep value play. And so I'm really excited about this one long term. But then, on the shorter term, like I said, I think GameStop is potentially putting in a very clean bottoming signal here. But looking over at AMC, those max pains, I think we might have a couple weeks of being around where we're at now before starting to move higher. But of course, it could always fade lower. But yeah, I'll just leave it on this GameStop chart here with that beautiful hammer candle. Although being below that 50-week moving average, we might have a little bit more time down here before starting to see some rallies. But I think we're starting to see some good signs, so I'll end it on that note. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.